So the research team wanted to give you an example of going long in something. Okay, how do you get long? And again, we're going to probably do one of these things in getting short as well. So we picked gold, and we're going to use GLD because it's a gold ETF. It's I would give it 3.25 stars liquidity wise. I'm not going to give it 4 because it's not there. 3.5 might be a little bit of a stretch. 3.25, all right, I'll give you that. But
it's subject to change. Markets get a little tighter,
yeah,
they get a little wider in there.
I mean, it's not quite as liquid as GC, but it's the best of the gold ETFs.
It's a lot smaller than GC.
5 powerful market plays for getting long, and in this case, we're using gold as the example.
Yep.
We're using GLD. We're not telling you to go long gold, that's for sure.
No, we're just showing you the different ways that you can do it. 5 different ways.
We're showing you 5 different strategies to go long. We're using gold as the example. All right, Beth, let's go.
And you can use this, this is just gold, but you can use this in anything, any stock.
That's my whole point. Yeah. 5 ways to go long. Mm-hmm. Okay, so we're going to talk about long stock, covered calls, synthetic longs, put credit spreads, and a call debit spread. All right, so just buying stock outright, buying stock, selling a call, doing the synthetic long, which is virtually the same as long stock, the put credit spread, which is selling an out of the money put spread, and the call debit spread, which is buying the at the money, which is okay. We made this really simple so you can see kind of the buying power on the right hand side from full notional to full minus the credit to 20 to 25%, to the width of the spread to the net debit. One of the things that separates trading in 2025 from trading in 2005 is just how people control their buying power usage
and the ease of controlling your buying power.
Yep. And so all of it's laid out in this slide. Let's go next slide. So the first slide here, well, the first one of these strategies we talk about is just long stock. Mm-hmm. This is your black and white plain vanilla trade. Just go out and buy the stock, Tony.
That's correct. And you don't have to buy 100 shares of anything. You can do odd lots if you really wanted to. You could do whatever you want, but 100 matches up to options. That's why we use 100.
But everything, for the purpose of this discussion, everything's a round lot, which is 100 shares.
Multiple of 100. Right.
Top 50. It's a 50-50 shot. Delta is 100, of course. The max profit, unlimited. The max loss can be stock go to 0, I guess. But that's assuming. I don't really think that that's fair because I don't think gold can go to 0. And the buying power reduction is...
Well, I didn't think oil could go under 0. So, I mean...
Do you think gold can go to 0? Because there'll be a lot of people...
No, but I didn't think oil can go under 0.
There'll be a lot of people zero bid for gold. And oil in the...
You'd have to get past my boy Frankie in the chat room before you get to 0, okay? He's going to be 1 cent.
Let's be clear about oil. Oil got under $10. But the oil that actually went negative was an oil contract that was expiring that day that had to be delivered.
That's correct.
So, but the actual oil, the futures market oil never got below 10.
That is correct.
So the buying power reduction is half of the notional, and since it's a $310 stock, it's $31,000. Let's go next slide. That's pretty basic. So then we just add a short call to this, and this is what happens when you sell a call against your long stock. Now the difference here is we would never sell a 63 Delta call. We would have sold an out of the money call. Yeah, so I'm not sure why they chose that particular call here. Maybe because
the oil's 311, gold is 311. They're selling the 318.
They are?
Yeah, it's giving you $62. There's a covered call.
I'm sorry.
Let me explain to a covered call. I know it's a little bit difficult for you. You just did 100 shares by buying it.
What's difficult for me is reading the screen.
You just did 100 shares by buying the stock outright. Now they're showing what else you could do. You could buy the stock outright still. We still have that stock.
Like I said,
now
the research team is spot on.
Now we're going to give somebody a contract to take that stock away from us out of the money. Go ahead. You can get it.
I will correct Tony here, and the research team is spot on. Mm-hmm. Don't diss the research team. The pop here goes from 50 to 63. Your delta is 63. That's your pop. Your max profit, because you've now capped it, is $1,200 instead of unlimited. Your max loss, obviously, $1,000 less. And your buying power reduction goes down by $500. Mm-hmm. It's not a dramatic change, but the most interesting part of it is your probability profit goes from 50 to 63.
Right.
That's pretty damn good. That's almost, you're almost improving it by 25+%. Mm-hmm. Let's go to the next slide. Well, a synthetic long is buying. No. Go back, Beth. Right there. So a synthetic long is buying a call and selling a put of the same strike. Could you do different strikes? Of course. But if you do different strikes, like buy an out of the money call and sell an out of the money put, you're going to have a lower delta. But you can do it on any delta that you want. A synthetic is just, hey, buying a call and selling a put is a synthetic long. If you want to buy an out of the money, if you want to sell an out of the money put and buy an out of the money call, you can do that too. Doesn't matter. Mm-hmm. Whatever the net delta is, that's where you are. In this case, the buying power reduction is only $7,000 as opposed to buying the stock outright. So there's a little bit of savings just because of the way margin rules are written. Mm-hmm. But it's still a delta of 100, and it's exactly the same as the synthetic long.
And I would prefer that over the long stock myself.
The requirement for the long stock was a minimum of 15,500. The requirement for this trade is 7,000. That's interesting. Okay, it's more capital efficient. That's why we're showing it. Let's go to the next slide. So this is kind of a classic short put spread. Now you're getting up to the 70% probability of profit, and you're getting to buying power of only $364. So now we're in a different world here. We're starting to use options as both a synthetic and a strategic approach to trading. We're improving our pop up to 70%. We have a much smaller delta, so trade's going to move slower. We have a much smaller max profit, only $136. We have a max loss of $364 and a buying power reduction, which is equivalent to the max loss, $364. Pretty simple, pretty straightforward. We've been talking about this for years.
Yep.
Let's go to the next slide. And here we have the $5 wide call debit spread. This is where we buy the at the money call. Either we buy one strike in the money or at the money, and we sell an out of the money call. In this case, we bought a call debit spread. The pop, if we had moved the long strike, one or two strikes in the money, the pop would have been 50-50. But since we did it just at the money, the pop's a little bit lower. It's 47. The delta is the same as the short put spread. The buying power reduction is 220. That means your max profit is going to be the inverse of, or 280, and your max loss is 220. The inverse of the width of the strikes. Mm-hmm. Classic. It's a classic long call spread. Let's go to the next slide. So stocks give you a single way to take risk, long or short shares. But options provide a toolkit of strategies that let you adjust probability of profit, define the risk and reward precisely, and scale positions with less capital compared to stock ownership. One of the reasons that the industry has gone from 8% option trading in 2001 when we first built Thinkorswim to almost 70% now in 2025 is precisely that reason. You can scale positions with less capital compared to stock ownership. Period. Do. That's it.
You good?
I am good.
Let's take a quick 90-second break as even the S&Ps make new lows, down $7. Gonna make you a holler? We'll find out.
I thought they were crashing.
We'll find out right after these messages. The opening bell next.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.